Hi everyone, welcome to our Willoughby financial year wrap. Stephen Daniel Kakmak here from Rain and Horn Willoughby, wanting to let everybody know the data and the numbers from the last 6 months, but also how we tracked as an area for the number of sales. Interestingly enough, we've seen 71 houses sold in Willoughby so far this calendar year, which is virtually identical to this time last year. So stock levels have been, whilst a lot of people complaining they've been low, they've been reasonably healthy. Also interesting to note, the average sale price is currently sitting at just under 3.38 million, where the end of quarter one was just under 3.5, which is about a 3% drop in the market.
Yeah, look, on the surface, 3% might not sound like a lot, but to have that done within a 3-month period, that means that on a 12-month rolling average, that's about a 12% decrease in prices if we keep going at this rate, which is quite scary to note. Look, everybody knows that the market has taken a bit of a turn since last year, and just yesterday there was the announcement of another interest rate hike. We actually received some very interesting information from Evans and Partners, who what they're suspecting is, now obviously we know that the cash rate is currently at 1.35%, and it is tipped that that's going to go as high as 2.5 or 2.75% by as early as Christmas.
It's going to be aggressive.
Very aggressive, and the main reason being is to try to combat the problem that we're having with inflation at the moment. Now, what sort of residual effect that's going to have on the marketplace? It will mean that lenders will start to tighten up, which means borrowing capacity will be limited by buyers, and therefore, prices will either stabilise or possibly dip further, which is a little bit of a concern until the next upswing, which probably won't be for another 3 to 5 years. So there could be some choppy waters.
Essentially, what that means, from where we see, essentially it means more buyers are cautious, which in turn means more of them are going to be less likely to go out there and actively make strong or last year's offers on properties. And I think there's going to be less buyers out there in the marketplace. If we see an influx of stock coming in the traditionally busier months around September, October, November, we think that's going to have a further impact in addition to rates rising. Now would represent opportunity to try and capitalise on some registered buyers who are still out there looking but haven't found a perfect home. However, we do think we're in for murky waters ahead.
Yeah, look, like Steve said, in one respect, it's not all doom and gloom, because there are still buyers coming to property, but rather than having 3, 4, 5 all trip over themselves and wanting to secure the home, it's really coming down to 1 or 2 key qualified buyers. It just means we need to have the right strategy in place on how to deal with them.
Yeah, so if you wanted any more information or the data that we've received, which will substantiate some of this information, feel free to drop us a line. Otherwise, we look forward to tracking the market and keeping you informed as we progress.
Catch you on the next video.